Why you do to me like this? Please work. Hey, I see that there are 5 people waiting. If you can hear me, please say hello, so I know you guys can hear me. There you go. Perfect. Awesome. Welcome everyone. Welcome back to the Traders and PJs family. Hope you guys had a great week this week, and hope you guys were able to kind of use the things that I taught last week and practice a little bit. So today has been a pretty highly requested video, and I think it's actually a very great video to cover, because this will definitely be a really important foundation for you to understand in order for you to be a great trader. Something I noticed from my last live streams is that when I ask people to kind of maybe save their questions, hey Andrew, thanks for tuning in, man. Save their questions to the end. I think maybe I'm missing a lot more questions than people would like to ask. So feel free to ask questions anytime during the lesson. All the chat is saved, so I can always just read it whenever I have a little bit of time or when I notice it, and I'll answer it when I get a chance. But feel free to just shoot off questions as you have them, keeping in mind the GFAST mentality. And you know, if you guys want notifications for when I go live, I would highly recommend you subscribing and then turning on the alert notifications, so you know whenever I go live. Like I went live yesterday to do my trading recap, $100 trading challenge recap for this week. Or you can follow me on Twitter and turn on your alert notifications there, because I always tweet out before I go live or when I go live. Yeah, and so let's get started. Today is about candlestick charts, support and resistance, and Thinkorswim. But really, actually, the higher level overview of what's covered today is psychology and trading psychology and how that works. And hopefully, if you guys find any of this valuable, you guys will consider liking the video and subscribing for my future lessons. So let's get started. Here's the table of contents that I posted on my Instagram. Today, we're going through my daily trading setup. You know, how do I set up and how do I keep track of news and what I look at when I'm trading, things in Thinkorswim that I use. Another additional philosophy or psychological lessons, more on candlestick charts, support and resistance, trends, candlestick patterns and chart patterns, and then post-action lessons or post-lesson actions. All right, so let's start and go through my daily trading setup. It's actually quite simple. You can go through it right here. I have Stock Market Live, which is a YouTube channel that is run by Trading Fraternity. And for news, I have my Robinhood account, which is my main account to trade with, my Webull account, which is my $100 trading account. I have Twitter, which I started using recently because of the Elon Musk event and how valuable having Twitter open is. I don't really tweet. I'm not really a Twitter person. But just how valuable it is for live news, I've started to incorporate it into my trading. So highly recommend you guys do this as well. I have investing.com for the economic calendar, just to keep track of what news events or economic events are happening that day. And then I have Google Drive. So these are 6 things I think. Oh, whoops. Let me see here. Yeah, 6 things. These 6 things, and Google Drive is really just so whenever I think of an idea for a future lesson, I write them down in my Google Drive. So how do I do that? So pretty quickly, it's pretty easy. I just open up a new Google Chrome. If you guys don't use this feature, you can see I'm obsessed with it. It's just the bookmark feature. All I have to do is go to the start of day and open all 6 tabs that are saved in it. It goes and opens it in the exact order I want it to. I go to YouTube. I go open Stock Market Live, for example. Ta-da! I have this going. I have my Robinhood account. I have my Webull account. I have Twitter open for news, live news. You can see what Donald Trump is saying or Elon Musk is saying. Or one thing that I like to use is breaking market news. They're really, really good. They tweet a lot, so you'll see they don't have a lot of likes or retweets on their posts because literally during the market hours, they're tweeting every 20 seconds or something. So there's no way people can just like every post. But their news titles has been really, really good. And they've caught a lot of breaking news. And you can also see that if you click here, Cult News is actually Trading Fraternity, and he follows them too. So highly recommend them. And then Economic Calendar, obviously, is investing.com. You just click Economic Calendar right here, and you have the day or the week, depending on how you want to look at it, and then my Google Drive. So that's what I have open. Obviously, I have a dual monitor setup. That's really all you need. I highly recommend at least having 2 though, but you don't need more than that. Having 1 tab for all your news, all your brokerages, and then obviously on the other screen I have Thinkorswim open. So let's go through that now on the next slide. Remember, everything said in this video is my opinion based on my trading experience. It is educational purposes only. Trading is very risky. Nothing I say is a recommendation. Please read the description and trade at your own risk. Okay. So on the next slide, let's talk about things that I use in Thinkorswim. Obviously, I use them for charting, which I've talked about. I use them to draw trend lines and price levels where I enter when I think I should have a stop loss, etc. But a few things that I haven't talked about yet is trade, which is a trade tab to talk about the volatility of a stock by looking at the option statistics. And obviously, I'll cover this more when we talk about options, but just want to cover it here starting today because we're going to talk about options next week, funny enough. So we're going to move pretty quickly because I love options and I want to teach you guys, which are my friends and my viewers, the things that I find most interesting as soon as possible. Before that, next week, I'm going to have a long-term investing video just because it would be irresponsible of me to start teaching about options which are really, really risky before I touch on long-term investing. So I'm going to have a long-term investing video. Always remember, don't trade with money you can't lose. Invest in the long term before you invest in the short term. So make sure you have a long-term portfolio. Whatever amount that is, it's based on your risk preference. You know, for me, I feel young. I feel like if I have a small long-term portfolio, I feel comfortable with that, right? And I'm not trading with money I can't afford to lose. So, and then the trade statistics followed for volatility, the analyze tab for earnings. I don't really understand this yet, but I want to share that this exists for you guys to use and maybe go learn on your own. Profitability analysis, which is very similar to the trade option statistics that talks about volatility and the expected ranges of prices in the future dates. And then fundamental analysis, which is really great that you can actually just do on Thinkorswim. So let's do that really quickly. Let's just go in order. The first thing is the trade tab up here on the top left above your charts. Boom. Put the trade tab, type in whatever ticker you want to type in. Let's say Tesla. Why not? Tesla. What's going on here? Oh, okay. There was just a lag. I was like, why is it not showing what I want? Here is the box that I primarily pay attention to. Up early to learn. Hey, welcome, Randy. Appreciate you waking up. And so let's look at some of the numbers that they're showing. The main things I would want you to pay attention to is IV percentile. We'll cover this in an options trading video in the future. And then also the current implied volatility. And maybe we'll talk about VWAP in the future. I don't really use it, but we can touch on it. Implied volatility, right now it's 105%. This is 46%. The higher the current IV percentile, I'll just touch on it right now. That means this is above. This implied volatility number is above 46% of the last 52 weeks. So just so you know, obviously, why is this not like 100% based on the $80 drop that it happened in recent times? Well, we all should know that, which is coronavirus destroyed the market and made the whole market drop like 30%, right? So crazy enough, a 10% move is only above 50% of the recent implied volatility numbers. But a really interesting concept that you should understand. The next one we're going to talk about is analyze. One of my favorite things to use is the fundamentals. Right now I have UAVS in here. You can look at what I primarily use this for is the market cap right here and the total shares outstanding right here. So that's 23.3 million shares outstanding at 31 market cap, which means if you divide this is the price of the stock. 31 market cap divided by the total shares outstanding is the price. So just so you know, 1.3. And then profitability analysis. So let's talk about earnings real quick. This is earnings, just so you can see what it looks like as long as it figures itself out. Hopefully, maybe this one is done. Oh God, okay. My computer is being a little slow today for some reason. Tesla, maybe. Okay, here. And then profitability analysis. Let's just do Tesla. So this is the current price of the stock. This is what the expected price is range. This is a 80. What is this? 16%. So 32. This is a 64% probability range of these months. So, and we'll talk about the basics of statistics that you need to know to be a better trader in one of my future videos that I have planned. So just know that this is a 64% probability, and obviously nobody can predict the future, but this is what they predict and based on the time. So this is May 8th, May 15th, May 22nd, May 29th, yada yada, you get it. The farther out, obviously, the more the higher the range, because you don't know what the future holds. And then earnings. So this actually can show you what happened in the historical earnings, right? Q1 of 18, Q2 of 2018, Q3 of 2018, yada yada, and their implied volatility. I don't truly understand. I have a basic idea, but if you want to learn more about this, go learn on your own, or after I really truly understand it better, I'll teach you guys as well. Okay, so that is good. Let us move on to what I really want to cover today, which is more about philosophy and psychology of traders. Before I move on to that, obviously, I want to share just general good philosophy, psychology that you should have as a trader. Number one is always have cautious optimism. Now, remember, you want to have a hypothesis, but don't be so sure of your hypothesis. Try to look for confirmation, or try to see that the stock is moving in the direction that you think it is before you begin investing. The market can do whatever it wants, and so in order to be safe, make sure that you have some sort of confirmation. Now, I'm gonna deviate from this a little bit when we talk about options trading, but that's another topic for another day. For example, I recently read on a YouTube video, airlines and banks will go up. Well, guess what? They went down significantly recently. So you just don't know what's going to happen. As much as you can predict things for probably a really short amount of time, but it's really hard to predict things for a medium amount of time. And then, funny enough, I wish I could share the things that are going on in my head. For the long term, generally you can expect things to go up, but then there are crazy events like this that just tank the market, right? And then number two is be happy to break even. I touch on this really, really strongly in my yesterday's video, episode 3 of $100 Trading Challenge. I made about 2% this week, and the reason I'm very happy about that is I made 5 trades, 4 of them were losers, and yet I still made money this week. That is how important it is to manage your risk, and that is how important it is to have the right mentality, which is trading is not about making money. Trading is about not losing money. There are going to be opportunities like Tesla or breaking news and things that you can maybe hop on and make a ton of money, and you have to be alive and have an account that exists in order to take advantage of those, and also take advantage of really predictable trends as well. Now, I don't want to just talk about the big swings. The little 1 base, 2 base hitters are also very important, and actually probably more important for your trading career. Remember that you are a beginner. It is normal to not be good at trading or consistently profitable yet, and that is why you should always paper trade. And if you should also watch my video from yesterday on why you should paper trade first, because I was new to Webull and I made a ton of mistakes, and I've traded a lot over my years, right? So even if you're experienced, when you use a new brokerage, you can make mistakes. So just always paper trade first, and hopefully my lessons will help shorten your learning curve. Okay, let's go on the meat of today's lesson. More on candlestick charts. What are we going to touch on? We're going to touch on support and resistance. I read the technical analysis book for ideas. It is an amazing book. If you want to be really good at technical analysis, I highly recommend you go buy it. And if you want to support this channel, please use the affiliate link in the description below. And then another thing we're going to talk about is more on trends and applying the psychology of support and resistance and trader psychology into why does that make trends work, right? Let's say if this chart just told us the price and we couldn't learn anything from it, well, then it would be pretty useless, right? And so that is why it's important to understand why technical analysis works and how traders think, so that we can take advantage of that. Okay, so let's talk about support and resistance. So it's market psychology, and an unintentional benefit from me understanding these concepts is that I save a lot of chart space. You can see here, I just have the charts, the price and the volume. Pretty much it, right? I have some other things, these 3 lines, they're actually all just simple moving averages. They're all the same thing, basically. And I only use that because I know other traders use it, but really for myself, I barely use it. I just use it as a reference to take advantage of other traders that are using it. And so price and volume is really my main things that I use. What happens is I can save a lot of space. I don't need all the technical indicators. RSI, MACD, blah, 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 blah. I've tried them. I personally think that price and volume is really all you need. I love simplicity. Up to you for how you want to trade. The beautiful thing about trading is you can trade however you want. You can trade whatever you want. So I'm just going to teach things that have worked well for me. And so this saves me a lot of space, and I can have 3 beautiful charts, and I don't need to have all these complications on them. So 3 things about support and resistance. But before that, we need to talk about the psychology of support and resistance and why it works. So let's think about this. Let's have this open. There are essentially really 3 or 4 groups, and which are the longs or the bulls, which means people that think the stock price is going to go up. There are the shorts and the bears who think the stock price is going to go down. And then there are the uncommitted. Now, the uncommitted falls into 2 categories, right? They can either be someone that really just wasn't even looking at the stock, and then they're like, oh hey, look, something's happening. Let's pay attention. Or they could have been one of these, shorts or longs, and they got out, right? And those are the 2 uncommitted parties. Let's think through a hypothetical scenario. All right, so whenever you trade, no matter who you are, a trade is a 2-step process, right? You can't just buy the stock. Oh, you can and hold it for a long term, but eventually you're probably going to sell it, right? And if you're going to short the stock, well, if you borrowed a stock to sell today, right now at the current price, eventually you have to buy it back at some price, whether it's more expensive or less expensive. So you have to do a 2-step process. You have to buy and sell, or you have to sell and buy, right? And so let's just say you were one of these people that you're currently a buyer here, and the stock price is going up. Well, that means you're starting to make money. As a buyer, you're like, oh, sweet, I'm making money. Well, what are you going to do? Probably add to your position, right? Because the trend is moving your direction. Your hypothesis is correct. You're going to add more money to the position. So that adds buying power, okay? Now, what happens if you are a seller? You're like, oh, shoot, I was wrong, right? So I want to get out of my position. But most likely, you're not just going to get out right away, because you know that most of the times, and this is also part of trader psychology, stocks don't just shoot up or shoot down. They bounce up and down, right? Moving up and down the support slowly, and this resistance. So you're going to wait for a pullback and then get rid of your stocks. But if you're a short seller, that means how do you get out of your stock in your position? You have to buy stocks, right? And so that adds buying power if on an upward trend. Now, what if you're uncommitted? Well, if you're uncommitted and you start to see, like us, a 2-legged move, for example, you see the uptrend, you see a pullback, and then you see a confirmation candle. Now you know there's an uptrend. You're going to hop on the buying power too. That adds a 3rd level of buying power. And then the 4th committed, which are like, oh, I used to buy, or I used to have a sell position. They're like, oh, the stock is moving now. I'm going to get back in. And they are the 4th adding buying power. So with all 4 of these things, you create a support area and a resistance area. The reason why you create a support area, let's just go uptrend first, and then it's the exact opposite for the reverse, right? An uptrend first. I'm a buyer or seller at this price point, 742. Now it's starting to go up. You're like, oh, shoot. I'm a seller. I'm in the wrong side, or I'm a buyer. Heck yeah, let's go. Okay, and so you're waiting for the pullback to add to your position so that you can add at a cheaper price. Obviously, you don't want to add at the top. Then it's going to be really hard to make money. So you're going to wait for a slight pullback, but it might not come all the way back down, and you don't know if it might just bounce back a little bit or bounce back a lot and go up, right? Because you know now that the momentum is moving upwards. So it's never going to come all the way down to the same level of support. Not all, obviously trading, like I said, it's risky. Anything can happen. Most likely, think about the 4 parties psychology. They're waiting for the opportunity to get in. Short sellers are like, I need to lose less money. When it's coming back down, they're getting the heck out of there, right? And buyers, and they might even switch to a long position. So they might sell their short position and buy into the long position, which is double the buying power or double the position. And then buyers are like, okay, I want to add more to the position. So when it comes down, everyone is starting to push it up. Now you understand momentum, and you understand that you're a trader. You have to enter and exit, right? That explains why there are pullbacks. If I'm a buyer down here and it's come all the way up to 756, well, eventually I have to take profit, right? So that is why people start selling. And another reason people start selling is people are like, okay, maybe it's going up too fast or it's going up too far. We are humans, right? We want to double check. I've mentioned this before, that this is realistic. This is accurate, right? This is a small move. but let's use the crazy thing that happened, and let's talk about the reverse side for Tesla. When Elon Musk tweeted that it was too high, stock prices are too high, what if you were a buyer right here? When you saw that tweet, guess what the heck you're doing? You're selling all of your stock in Tesla, basically. What if you're a short seller? You're like, awesome, now I'm right. I'm going to add more selling power to this, right? So those two parties are like, all right, pushing this stock down. The third party, I'm uncommitted. Elon just tweeted something crazy. I'm going to sell. And then the uncommitted that had a position before are also going to sell. Now, eventually, you're going to come down, and if you're a short seller, you're going to want to take profit, right? And so right here, boom, you're a short seller. You take profit. It causes this jump here, this first part of the two-legged move. Let me add a pen here. The first part of the two-legged move, boom. Oh, Jesus, that's fat. Okay, first part of the two-legged move, you're a short seller, take profit. I was originally a buyer here. I see a pullback. I need to get the heck out of my buy position now that I'm losing less money, right? Because they're moving super fast. I sell at this point, and boom, it adds to the selling pressure. And then if I'm uncommitted, I'm also adding to this equation. Now you understand, right? So there you have to, if you have there's existing long people, buyers, and there are existing sellers. And there are people, you have to take profit. You're not just going to hold your sell position forever, right? And so that's why there was this move. And why was there this kind of pullback? And it did break 700, but it immediately basically went up. And it's actually funny because oops. So hopefully you start to understand why there is support and resistance areas. Support areas on a downtrend are where short sellers are taking profit, right? And then on the resistance is because the buyers originally here are getting out at a smaller loss than they originally, as much as possible. The uncommitted are like, awesome, I got a really great price, because they don't want to enter down here. What if it just jumps back up? So they want to make sure that there's some room for profit. So they're also pushing it down after this pullback as well. And that creates a resistance, right? And then let's just create a line here. Support here. Oh, shoot. Let's just point at it. And so that makes sense, right? Just short sellers are taking profit. That creates a support. Resistance because the buyers are getting out and the new uncommitted are entering for trying to take advantage of the downtrend. On the uptrend, it's the opposite. So on the uptrend, buyers they create a resistance because they're trying to take profit. And then on a pullback, there's creating support because the short sellers are trying to get out of their position. So they lose less money and it pushes it up, right? So boom, boom, boom. Hopefully now you can understand why it goes up and down or down and up. And then why it creates two-legged moves, which is what we're looking for, right? And we're trying to enter on the second leg of the move. Okay, awesome. So what creates significant support and resistance, right? All things are always going to move up and down. Hey, Jimmy, how you guys doing? And thanks, Manny, for coming as well. So what makes significant support and resistance areas? And there's three factors. Number one is how long was it there, right? If it was there for a long time, like 700 level for Tesla after this huge pullback, it was since 12 o'clock p.m. So it was there for 4 hours, okay, until market close. So this is pretty strong resistance. And it makes sense because it's also a round number, and I'll touch on that in a little bit. Next one is volume, right? So how many people are trapped in that area, for example? How many people have entered a long position or a short position here? That will affect the next resistance and support area, right? Because if there's a ton of people, let's say, long right now or bought Tesla stock, and then it starts shooting down, well, when it tries to come back up, all those buyers that had bought, they're going to create a resistance area because they are going to try to make their loss less when it comes back up and try to sell a ton of their volume, all their shares, right? And that's why volume is so important, and that also determines momentum, right? previous volume can determine future momentum. And so that's important to know. And how recent was it? Because let's say there was like 50 million people that bought Tesla stock. Well, if they bought it last year, that doesn't matter, right? Because they're no longer in they're no longer even in these positions probably. They probably sold it a long time ago, right? They're probably, if anything, uncommitted, or who cares? You don't care the volume about 2 years ago because you don't know where the heck those people are today, right? So the more recent the transaction and the volume, the more significant the support and resistance is. Hopefully now you understand why technical analysis works, right? And it's really the study of human psychology, taking advantage of FOMO. If people want to hop on the trend, that pushes it either in the existing direction, which is up or down, stronger. And that's a huge FOMO factor, and etc. The reason why support and resistance levels work and why they can predict the market. Hopefully now you can understand why that there's going to be pullbacks, and that there's going to be a continuation or a second leg. Not always, but most likely. Support and resistance switch roles, and it depends on the degree of penetration. Example, Tesla. So, which is why I suggest using a mental stop loss about 0.5% below a previous support or resistance area. So let's look at Tesla again. This broke this support right here, right? This broke this support right here. Boom. When you see when it touched here, it actually bounced a little bit because people wanted to make sure that this downtrend is a real downtrend. Or if you were a buyer, you were getting the heck out of your position, right? At this point, because you see that it's getting close to a support area. Now, after it breaks through, it's gonna switch roles, because now it's above the current stock price, and now it becomes a future resistance area, which is at the 740 mark. Hopefully that makes sense. If it doesn't, please ask your questions in chat, and I'll answer them as best as I can. This is why it's important to set your mental stop loss at a previous support or resistance area. So let's just pretend this is a breakout, two-legged uptrend right here. Why do I set my support below here? Because people are thinking mentally that this is a support area, and they probably won't let it touch all the way back here, right? Because as I said before, it probably won't, and then people are going to add to their position. Short sellers are going to add to their position when it pulls back. Buyers are going to get out of their position to take a smaller loss. Now, they don't want to risk it jumping up further and losing their opportunity to save a little bit of money. So that's why. Everyone's always scared of missing the opportunity, and that creates these trends that never always go back to the original support or resistance. But that is why if they're broken, they're very significant, because people don't think they are. So if they are, well, then that makes a huge difference. And that's why when Tesla broke the 700 mark, it dropped $20 instantaneously in that candle, because like, oh my God, it broke 700, boom, it's shot down. So next thing, support and resistance. Why I set my stop loss, mental stop loss, 0.5% below support or resistance. Order clustering around round numbers. Humans are to a degree, they like simplicity, and so round numbers just creates psychological support and resistance. 700. They're usually in factors of 10, 25, 50, 100, sometimes even 1,000, depending on the stock price. And so, if you're trading like the Dow Jones or like the S&P 500 and stuff like that. And so that's why you should avoid placing trade orders at these round numbers. If anything, you should maybe set your like stop loss below or above the round numbers, so you can avoid the clustering. And then also you can use this to your advantage, because people, that there's going to be a strong support at 700, then you kind of can maybe set your stop loss below it, and it's really hard for it to break that 700 number if it's on a downtrend, and use that to your advantage. Now, investing is about not losing money, so a large focus should be where your break-even point is, and I'm talking about this to prepare for options trading in the future. But this is why the two-legged strategy is so good, right, and consistent, because when you wait for that confirmation candle, let's just pretend here again, on this uptrend. When you see this confirmation candle and you enter, right, well, guess what? Your break-even point is right near the support area. Excuse me. So on this next pullback, if there is a pullback or a downward trend, a lot of the psychological factors that I discussed is going to protect your entry point, and then hopefully, ideally, at least allow you to break even, right? And if it breaks past your break even point, which is why your stop loss is about 0.5% below the support area right here, then you know you should get out. And that's why it's so consistent. By setting your right entry point above or right above or near a support area, you increase the chances that the trend will not hit your stop loss. And I should have an emphasis on this, not hit your stop loss, right? And when we talk about buying options and entering a trade position for an options trading, this is going to be very important. Managing where your break-even point is. It obviously makes no sense to you right now. We'll cover it on next Saturday's lesson. Maybe actually have to wait one more week. I was putting together the lesson plan, and we may not even get to that point. There's so much to talk about options for. But the moving averages. So the 200 SMA, simple moving average, there's a ton of like moving averages. Don't really use this, but as I said, they use this as support. So let's see here. And the longer the period, remember, the more significant a line or a trend is. You can see that when oh wait, where is it? Where's a good example? It's hard to have an example just because the market's been so crazy recently. But just know that people use this trend line, the 200 moving average trend line. This line actually is not a trend line. It's just this line as a resistance or support area. So it might hit this and then bounce back down, or hit this and bounce back up, just because people think of it as a psychological support or resistance area. So that's important to know. Now, next one is trends. So now you understand the significance of support and resistance and why, support and resistance will slowly move up, as I said before, right? So if this was your original entry price, and then as it moves up and it pulls back, guess what? It's not going to pull all the way back because of the four psychological groups, the four groups that I talked about, and then it pushes it up. So the next resistance point is higher, yada, yada, upwards. Upward moving support and resistance line is an uptrend. A downward moving support and resistance lines is a downtrend. And that should make sense as to why. And so that creates trend classifications, right? You can see a major trend, which is the longest time period. Let's use Tesla here. As I mentioned previously, major, secondary, minor. Cool. And so major, secondary, minor is the longest period is the major trend, which we will draw a line for right now. Let's just go from here. And always use all the price action when you draw a trend line. Oh, shoot. It's not a trend line. Drawing tool. And I really only use two drawing tools, the price action and the trend line. And then the pointer, obviously. So the bottom of this to the bottom, let's just say I didn't know all of this was going to happen, but I know that this is going to be the bottom of this candle. Well, then I can predict trend lines usually extend. Okay, so you can see that here, that if you draw an extension here, it bounced off at this level because people thought it was going to extend. And hopefully that should make sense. So you could have predicted that this was probably going to go bounce off this trend line and go back up and do this kind of zigzag action. So this is the major trend. It is a major downtrend, and it usually goes up and down, right? Trends always move in a kind of a parabolic motion, which just means like up-down trends. Now, within this trend, there's a secondary trend. On this uptrend, there was also up-down trend, right? Up-down parabolic movement trend, and that's called the secondary major trend. This is the major trend. This is a secondary trend, and then within those candles of each day, that's the minor trend, right? Hopefully that starts to make sense. And within days, there are also support and resistance that move around and determine a trend. So this would have been an uptrend. Then it went sideways for a little bit, and then it went on a downtrend. And when things break trend lines, for example, if you look at the day here, it broke this trend line here. Actually, it broke a channel line. Let me see. It broke a trend line. On a downtrend, the top is the trend line, and the down is the channel line. Why? Because if you're going down, that means the price is unable to break a certain resistance, right? And that's why it's a downtrend. If you're going up, the price is unable to go down below a support level, and that's why it's an uptrend. So you always draw the trend line based on the direction of the trend, and then on the other side of it, which it keeps bouncing off of, that is called a channel line. Now you can see, if you look here, it broke this trend line. If we extend this, it broke this trend line. When the stock price or the S&P 500 price breaks a trend line, what happens is that means there is a change of trend. This does not mean a reversal. This is very different. It can break the trend and it can start to go sideways. It can consolidate as people try to reassess whether or not which direction it should go, and it could continue to go down. But if it breaks a trend line, that means the trend is changing, and then it could be a reversal as well. And we can look at chart patterns to determine that. So talked about trend line and channel line. Hopefully that should make sense. And then so why is this important? This is important to your trade plan. If you know that it's going to channel between here after going and looking and writing and drawing these trend lines, you can kind of determine when it's a good time to take profit. Let's say you are a short here or a short here. Well, when it starts to hit this trend line, well, you wouldn't know. You would probably know this one. This is your first bounce, right? Bounce, then you know probably here is a good time to take profit because you can now draw a trend line. You need at least 2 points to draw a trend line. Or actually, you could have drawn a trend line on the top because it's a downtrend. I'm silly. That was a channel line. And know that this may be a good point. This may be a good point. Below these points are a good time to take profit because they're below the trend line. Hopefully that makes sense. So this makes you know good times to enter a price, like enter a trade. So if you're trying to, let's say, short, I really don't like using shorts because I want you guys to be bull biased a little bit just to start because it's dangerous to short stocks. But we will talk about a short strategy later today. But if you are short, you don't want to short down here. You want to short when it comes back and tries to hit this trend line. So you can make a really good and manage your entry positions that way. Take reversal positions can be dangerous, but you can do that. Like you can see, oh, it's going to bounce off the channel line. Let me change my position and take the other way. I do not recommend doing that. You're trading against the trend. It is very risky, but some people do it. Just if you're going to do it with very small amounts of capital. Okay. The next thing is if it breaks a channel line, that means it's an acceleration of the trend. And hopefully that should make sense. If it's going down and then it starts to go down faster, that's an acceleration of a trend. The safest trend to participate is usually a 45-degree trend. And why is that? Because people are it's almost predictable, right? Because it's going to go up in a very specific angle. People are testing the support and resistance often if it's going at 45 degrees. Now, remember the CNX trade that I made? This is not a very... Oh shoot, what day was it? 27, right? This is not a very good we need to touch on this concept right here real quickly. So this is not a great trend to hop on because there isn't a lot of times that it was tested and it hasn't been a trend for a long time. Now, when you're playing earnings, unfortunately, you're just not going to have a lot of opportunities for it to be intact. But just know the longer it continues to go upwards, well, at least your position or trade that you took has a higher probability of continuing to go upwards. But it's not going to be intact a long time. It's not going to be tested very many times. But that is why a two-legged movement, we don't enter until the second leg because we at least get it tested once. All right, it's going up, it pulls back. You have at least one test more, or basically the first test of the second leg, and that's when the second leg exists, and then that is when you enter the trade. And that's why a two-legged trend is very consistently profitable for the most part. All right, so let's go through some candlestick patterns and chart patterns. Candlestick patterns help you read a candlestick, and this is based on trader psychology to determine which direction, if it's going to continue to go down or if it's going to change direction. So For example, a neutral is like a doji, which is, it looks like, look, it went up a bunch and it went down a bunch, but it came back to where it was. These both kind of basically mean a somewhat of a doji, right? So let me just draw the summaries for these. A doji just means it went up, went down, literally came back to the same part, but that's why there's wicks, because the highest point and the lowest point are away from where you started. Same thing with the spinning tops, except there's maybe a little bit of a downtrend or a little bit of a uptrend, right? And that's it. Okay. So if you see this kind of candle, a hammer, what does that mean? So it started to go down a bunch. It went up a bunch maybe, but it didn't go, it went down way more than it went up, okay? And guess what does that mean? Remember, there are traders that do this. That is why it's moving like that. That means that there are traders down here, okay? They try to sell. There's people that try to sell on this downward movement, and they couldn't push the price down. What does that mean? That's very bullish, right? If there's a bunch of people trapped down here that sold, guess what? They're going to want to get out of their position because their trend that they predicted, which is why we don't predict trends, or we try not to. Unfortunately, that will probably it's a necessary thing to do for options, and I'll talk about risk management then on that, but we'll talk about that next week. Which is why you can get trapped, and it's very dangerous. And so if you're a seller here or short seller here, you're going to get out, and it's going to push the stock price up. So just I'm not going to go through all of these. Think through, if anything, this could be a great homework assignment. Go and think through why each of these are really, why are they bullish, right? And you should understand the psychology of them. Don't just, and this is what a lot of traders do, they just take it at face value. They're like, some smart expert traders like, this is a bullish candlestick pattern. This is a bearish candlestick pattern. And they're like, okay. And then they just start trading. No, understand why it is, okay? So that you can actually be intentional about your trading and you can have a higher success rate. If you understand that a bunch of people are trapped at certain places, then you can actually take advantage of that. And that is also why volume is important, right? There's a blue candlestick right here, down here. If only like 5 people got trapped down here, well, guess what? Then it's not going to move up very much. But if 1 million people got trapped down here, then it's going to move a ton, right? So that's a great exercise. I'll let you guys kind of think through all the other candlesticks because I don't want to spend too much time on that. And then the next one is the chart pattern cheat sheet. This is going back to support and resistance levels, right? So if you look here, you entered. There's a resistance area here. There's a support area here. And guess what? It broke the resistance. Remember, this is an existing resistance. That is why this is a bullish pattern. So it all goes back for a candlestick. This really goes back to trader psychology and the volume and the number of people trapped or in certain positions at what price. Candlestick patterns are for psychology. Chart patterns are support and resistance. So the application of psychology, right? And so that is why when it breaks this resistance line on the upward trend again on that two-legged movement, it's gonna usually push it upwards significantly, and you have a lot of buying power behind you because you know that the short sellers are getting out of their position at a loss, but a smaller loss than as small of a loss they could. Other buyers like yourself are adding to your position so that you can add at a cheaper price. Other uncommitted people are trying to ride the trend with you. And the exact opposite is true for bearish chart patterns. Now, what about reversal patterns? How do they work? I'll touch on this quickly because we haven't talked about this before. If you get tested, remember how significant is a trend line or how significant is a resistance or support line is based on how many times it was tested and how much volume there was and how recent it was. Well, if your most recent trend line with a ton of volume over here was tested and then it comes back and it's a ton of volume over here and tested again, it got tested twice, it's super recent, and there's a ton of volume, guess what? It is a really good support line, and therefore it's a reversal pattern, right? If it goes up and down. Hopefully that all makes sense. Okay, so with that, that's really the meat of the lesson for today. These are the exact same post-lesson actions. I'm going to have to learn how to say that. Post-lesson actions as lesson 1. Go educate yourself. Go learn. Go think through the homework assignment, which is, think through the candlestick patterns. Think through the psychology here. Think through the support and resistance lines, applications here. go educate yourself. Go watch Stock Market Live. Go watch Trading Fraternity. Another way you can educate yourself is go understand by the numbers in the section of fundamentals. So if you go to analyze, you go to fundamentals. Here, there's a by the numbers section, right? I just talked about the market cap. I just talked about the total shares outstanding. But there's a ton of other numbers here. Price to earnings ratio, cash flow, dividend payout, long-term debt to capital, how much debt do they have in the company, all this stuff. These are all pretty important. That's why they're shown. So go understand those things, and that's a really great way to educate yourself on fundamental analysis. And then we just talked a ton about technical analysis today, and so you can use that for your week's trading this week. Go start a paper trading account. Like I said, paper trade first. Watch my episode 3 lesson or episode 3 video yesterday on the $100 trading account. Hopefully it'll hit home how important paper trading is. But if you're going to open a Webull or a Robinhood account, I highly recommend depositing 100 so you can get the promotions that they do. The more and more I try Robinhood and Webull, thank you, sir. Yes, Chris, you're welcome. The more and more I try Robinhood, Webull. Look, Robinhood, I love you, but Webull is just right now so much better. Go do Webull. Webull allows you to short shares. I almost thought you couldn't short shares because I didn't see that option. Even though my account is $30,000 plus on Robinhood, I still can't short shares. Apparently, it's just Robinhood doesn't want you to take the risk, and we're going to talk about that right now in a bit, and why it's so dangerous to short. Okay. But at least Webull gives you the freaking option. As a trader, I want to manage my own risk. I want to have the option to take on risks that I want to take on, not the brokerage forcing me not to be able to. So highly recommend Webull over Robinhood right now just because of the restrictions Robinhood has. I understand why they do it. They want to protect beginner investors, but I want to be able to experiment. I want to paper trade. I want to take and learn from my experiments. I don't have to risk real money, right? At least let me do it, paper trading or something. So highly recommend Webull over Robinhood just based on that right now. Love Robinhood still, and I still use them for my main account. And so go prepare trading plans based on understanding the psychology of support and resistance and the psychology of traders having to buy and sell. They can't just do one, right? A buyer eventually has to sell, and a seller eventually has to buy. So remember that, and go prepare a trading plan with this. Comment in the comments below, and we can analyze those together. Next one is comment below if you have anything you want me to cover in future lessons. Right now I'm intending to teach you trading options next week, which I'm really excited about. There's going to be a long-term investing video at the middle of the week, and we're going to talk about statistics, kind of that probability stuff in a near future video. I don't know when. I just have so many ideas I want to teach you guys. Probably the following week after this week. Not required, but look, this is a lot of stuff I learned from reading this book. This book is amazing, and this only scratches the surface. So 100% recommend this book. You don't have to buy it, but if you want to support the channel, use the affiliate link in the description. Hopefully you understand why candlestick patterns and chart patterns work now, and you understand the market psychology of why support and resistance works. Please paper trade until you are familiar with your brokerage platform and are consistently profitable for at least 1 to 2 months. From my experience, mastering one trading strategy, like the flag/pennant strategy, which is aka the two-legged move strategy, is really what you can do to become a consistently profitable trader as soon as possible. And you can learn new strategies over time. And I'm actually going to talk about a new strategy that I'm going to be trying to learn pretty soon, which is this UAVS. Highly risky strategy, but maybe I might do it with really small amounts of capital. In fact, you don't really need more than one. If you can just be really good at one strategy and you can make a ton of money doing one strategy, then just go and trade one strategy. But make sure you paper trade until you're consistently profitable using that strategy. Remember to always have a trading plan. Have a catalyst, whether that is just support and resistance. Even technical stuff can be catalyst. You don't have to have a news event, right? There are some traders out there that just trade purely on technical analysis. Know that. And I take advantage of them. Or I try to, because I am a fundamental investor first before technicals. And if you're only a technical trader, you're going to miss fundamental news that moves the stocks a lot. So that's why I always recommend doing both. Make sure you have a risk management plan and then execute, right? Watch out for the psychology. Watch out for FOMO. Make sure you have a good entry price. Break-even point is the most important thing. Be near support and resistance areas so that you protect yourself. And then have a specific catalyst in mind, right? Like a trend based on a support and resistance areas could even count, like I mentioned. The beautiful thing about trading is that everyone can play the game differently. The reason I call it a game is because that's really how I think about it. I don't trade with money I can't risk losing, and so really that I don't have any emotional investment in the trading, and so I can just trade it like I'm playing a game because I'm not scared of losing the money. There are a ton of ways and things to trade. I am simply teaching what I have found to have worked best for me. My brother and I came up with a new catchphrase for this channel. I don't know if you guys like it. I love not Game of Thrones, Hunger Games, and so I kind of thought of like, may volatility be ever in your favor, and I hope that is the case for this upcoming week when you trade. Now, one example of a new strategy, and which is why it's fun being a trader, is I talked about this in my $100 trading account video about pump and dumps and the manipulation. And so I was thinking, well, I know that there's going to be manipulation. Maybe I can play with small amounts of capital to take advantage of that. And I'm still thinking through a strategy to do that. So I'm not going to share a specific strategy with you. But like I said, here's UAVS. Right? And so they only have 23.3 million shares total, okay, in the entire stock market. When you look at their daily volume, which is insane when you look at this over here, this day they traded 65.3 million times. This day they traded 92 million times. This day they traded 184 million times. Now, if you look at the calculator here and do 184 divided by 23.3, that means all of the shares in the entire stock market traded 8 times, okay, this day. That, and you compare it to the volume over here, which is like a million. Some of them are even 60,000 on certain days. You know this is a manipulation, okay? This is a really cheap stock. It's going up like crazy. And so it's clear to see when there are signs of manipulation. Now, I could be wrong, right? I would want to look into if there's certain news or reasons that this is skyrocketing. Let's say, this is a drone manufacturer. Amazon is like planning on buying them. Well, that's a really good reason for the stock to move up, right? Which is why a lot of people actually got tricked. I think the daughter of the founder here tweeted a picture about them working with Amazon. A lot of people got really optimistic about it. And so this is why it's really dangerous to play this strategy. But I'm excited to kind of like play around with it and see if I can make a consistently way of being profitable trading this strategy. But here I want to talk about the dangers of shorting. Okay, let's just say for some reason that it was trading at $1. Okay, it shoots up to $1.50. That is a 50% increase in price. Okay, at this point you're like, no way, this is way too expensive. This is definitely going to come down, and you take a short position, which means you borrow shares to sell this company. You borrow shares at like $1.50, and you're like, hey, I'm going to sell you this share that I'm borrowing from someone else for $1.50. You take $1.50 home, and let's say you put you have a $150 account. You put 100% of your account in this, and you sell. What? I can't do math. 100 shares. You sell 100 shares at $1.50. Well, guess what? The next day, it shot up to $5. Okay, what is that? I'm not the best at math. That is 330%. Remember, you already sold and put 100% of your investment, your account, selling those 100 shares to borrow the 100 shares. You gave them $100, $150 to borrow the shares, and you sold them. Okay, you just lost 300% of your account, buddy. All right, so imagine you don't have extra money in your account. Well, let's say Webull doesn't have like risk management measures, and they actually let you go up to this point. Well, then now you owe Webull 300% of, guess what, money you don't have. They're gonna sue you, and you're probably gonna have to like sell your car or something in order to pay them back. So just be very careful and understand why shorting is very dangerous. Stocks can go up as high as they want, but they can only go down to zero. All right, so that is today's lesson. Hopefully you guys learned a lot. Again, may volatility be ever in your favor when you're trading this week. Always paper trade first so that you can learn from your mistakes. And let me know if you have any questions from today's lesson. I'll stay on for like another 5 minutes. close this. Goodbye. Any questions? Hopefully I didn't talk too fast. I mean, if I talk too fast anywhere, feel free to ask me a question over that. Can you go over what exactly is a confirmation candle? Yeah, happy to do that. So, shoot, I just closed Thinkorswim. And also stay hydrated. Talking for an hour definitely dehydrates you. Any other questions while I get ready to answer this one? Like I said, feel free to ask questions anytime during the lesson. I will get to them when I can. I can see all of your chat into perpetuity because it's saved. Also know that on YouTube. So let's just look at CNX, right? Because I know about this one. So CNX, I see a breakout here, and basically saying like, hey, it was trading sideways here. A new trend has formed. It broke out. And so this is an uptrend, right? And I touched on this in prior lessons, but this is an uptrend. Now, I said I'm not going to enter this position until the two-legged move because I know that people are going to start to take profit here, and some short sellers are just going to get out. They're scared that it's going to continue to go up, right? Some sellers are going to get out. Some buyers are going to take profit. So I know it's going to make a downward trend eventually. I don't know where. And so there's a two-legged trend. And it's never an uptrend until it makes a second leg, okay? And so this is the first leg. It comes back and pulls back. Now I'm looking for a confirmation candle. What is a confirmation candle? A confirmation candle is the next green candle that breaks this sideways trend, or it could even go like this, and then it breaks this area of resistance, right? This broke this area of resistance. I see a confirmation. Is it a great confirmation because it came straight back down? No. But I talked about this in my first episode of my $100 trading challenge. It broke this candle during the call. I took that as something good happened on the call. And so on the next candle, I didn't know this was red, by the way, obviously, when it's forming in real time. I entered my position. So I got a confirmation here, right? Because it broke this resistance area. That's a confirmation candle. Any other questions? Hopefully, does that answer your question, Vincent? And you'll see that on the cheat sheet here. They're always telling you to buy after a confirmation that it broke a trend line or a channel line, right? So this is an uptrend, but this is a downtrend here. This is a major trend. Inside the major trend, there is a secondary trend. And so the trend line is down, so you know that the top part is the trend line. It broke a trend line, which means a change in trend. Taking the concepts that we were talking about over here, change in trend, breaking of trend line is a change in trend, breaking of channel line is an acceleration of trend. So it broke this trend line because this is a secondary downtrend inside this major uptrend, and that's a confirmation candle, and you can get in. You don't even technically need a candle. I like to see a candle form because that means other people saw a candle form, and then their psychology is like, oh, it's green. Boom, I'm going to enter. So I want to take advantage of that. You could just enter as soon as it breaks the trend line, right? Because it technically means that there is a new trend. Yes, exactly. So there's an uptrend. So there's a confirmation of a trend by seeing a two-legged movement. And then on the second leg of that movement, you look for a confirmation candle, which is a candle that breaks the trend line. Yeah. Any other questions? Otherwise, I'm going to hop off in a minute here. All right, awesome. Thank you guys, all 7 of you guys, for tuning in today. Hopefully you guys learned a lot and you guys can take advantage of this new information and new lesson for your trading to trade even more consistently and profitable this week. Remember, risk management over everything, and may volatility be ever in your favor for this week. And I will see you guys at my next video. Thank you so much.